Could you talk about the management of the bank, why they've managed to grow so fast with so little loan losses, that the growth has been so successful? What have they done differently to the industry to be so successful in the past?
If you see the HDFC Bank's management, we have done a detailed analysis as shown from the slides. The HDFC Bank's key people, we have analyzed the 4 key people from the HDFC Bank: Mr. Aditya Puri, Mr. Vasudev, Mr. Harish Engineer, and Mr. Paresh Sikandar. They have been with the bank for the past since inception, and put together they have got a banking experience of more than 150 years. If you got to see, all of them, most of them are ex-Bank of America employees or City bankers. They have been able to put upon strategies at right point of time, which actually have led the bank to the place where they are right now. If you see in 2002 in India, when there was a lot of opportunity in the corporate banking side, banks like ICICI and Axis Bank ventured into the corporate side, whereas HDFC Bank, as a strategic play, decided to hold on to the retail side. And it has paid off really well for the bank in 2007-2008 crisis, when all other private sector banks had to bear losses, they were able to sustain. And these were some of the strategic reasons why they were able to actually grow at a very faster rate compared to its peers.
Just to add one small point, that is the attrition level, at least in the top management level, is extremely low in HDFC Bank, and hence we believe the top management is of extreme impeccable quality for the bank.
Thank you.
Just following on from the management question, if you were to become the CEO of the company, what would you do if you were worried about the share price falling, or how would you move forward with the company to ensure the continued success? And would you try to move outside India, or what are the kind of things that you think the company could do?
If you see the vision statement of HDFC Bank is to become the world-class Indian bank. They have been focusing on to become the world-class Indian bank, and if we are the CEOs of the company, then probably we would like to rework on the strategy which the HDFC Bank have embarked right now. If you see, in the past 1 year, they are having a movement towards opening more branches in the semi-urban and rural areas of India. And if you see the number of branches opened in the past 1 year, more than 70 to 80% of the branches have been opened in the semi-urban and rural areas. We believe opening of branches in the semi-urban and rural areas, which will have lesser number of CASA accretion in terms of current accounts and savings accounts, which is a major component of the retail play of HDFC Bank, and also the operating profit margins would take a hit in terms of lesser profitability coming out from the semi-urban and rural areas. If you were the management, that would be one strategy which we'd like to look back into, and probably expand in the Tier 1 and Tier 2 cities of India, where we believe the bank would be able to generate more profits from.
Thank you. The difference between the fair value that you have concluded and the market price is around 8%.
Yeah.
Would you consider the sell recommendation to be a bit harsh? I mean, given especially that the bank's position is somewhat leading in the banking industry in India, don't you think it's a bit harsh to give it a sell instead of a hold, for example?
We have been tracking this bank for the past 8 months, and if you see, we have been having a sell recommendation from May 2012. And our sell recommendation has been working in favor of us, and we had a downside potential of approximately 20% at that point of time. And if you see the latest quarter numbers of HDFC Bank, we had anticipated increase in delinquency, and that has actually worked out for us. In the recent Q3 numbers, there has been a 9 BPS increase in GNPA, which were as per our estimates. And also there has been certain other factors, the macro weakening, the political instability in India actually coming up to the forefront. So all those factors have actually played out, and our call has worked. And we believe that we should stick with the sell recommendation rather than going for the hold recommendation because of the opportunity cost. This target price of 1 year, we believe that the target will come down to the so-called our fair value of 8% downside. Even if you see our Monte Carlo analysis, it shows a worst case scenario of a price of around 550. That is when, if all our investment thesis plays out and if it goes to the extreme levels, then we can expect a more better downside potential. So we believe that even at the 8% downside, it's a sell call.
Can you short the stock in the Indian market?
Yeah, we can actually short the stock. It's like there is a facility by which you can actually borrow the stock and then short it for a specific period of time. Or else, if you want, you can take positions in the options market as well.
Okay.
Just to add on to his point, primarily the strategy of HDFC Bank, as we know that it has a retail play, and there's increased competition in that particular segment. And also we are not very positive about the macroeconomic scenario in India. We believe there are a lot of structural issues as compared to the cyclical issues, and hence we believe that downside risk for HDFC Bank is very large. And also, as mentioned by my colleagues, the opportunity cost is very high. You know, there are a lot of other banks and other stocks in Indian market wherein you can actually put your money and reap profits. So only if it arrives at this target price do we believe that we should enter this particular stock.
Just had a question on your macroeconomics. You're saying that you think that there's going to be slowing down in the Indian economy, and therefore that's going to hit their growth in assets. What happens if growth actually does much better than you forecast, given all emerging markets are doing much better?
We basically believe that primarily this is going to be a slowdown in the economy, primarily because even in IMF reports says that the GDP growth is going to be 4.9 to 5.3, and also the various estimates, latest GDP numbers are around 5% growth. So that's one of the main theses. Yes, we have considered the risk of the GDP numbers actually growing really well. India had clocked a high growth period of GDP growth was around 8% at one point in time, and if that actually happens, then our top line growth, that is the growth in interest income, is definitely going to increase, because the interest income that's going to be earned is generally 2.5x to 3x multiple of the GDP. So that is definitely going to happen. But then we have actually considered in our Monte Carlo simulation this particular scenario to be playing out, and even with that particular analysis, the maximum price that we believe the bank would have requires to attain is around 620.
To add on to her answer, the growth in the Indian economy, the slowdown in the growth in the Indian economy is primarily structural, as believed by us. That is and in case, as we have already factored in our Monte Carlo, if there is a quick revival in the Indian economy, that would only be in the case of a quick structural reshuffle in the economy, and the probability of that is very less, because a revival of the Indian economy is very closely linked to the revival in the political economy of India. Because if you see from the recent contemporary political history of India, there has been a trend of coalition governments which make decision making extremely difficult, and also the implementation of policies. So only if we can expect a single party government in the future can we expect this, and given the trend of growing regionalism in India, we expect more and more coalition governments going forward.
Do you have a breakdown of the credit portfolio in terms of retail versus corporate?
So till the slide comes, I'll tell you the basic retail and wholesale portfolio. The retail plays 54%, of the total assets, 54% of the assets are into retail and 46% in the wholesale. Can we show that slide?
Yeah.
Out of the total portfolio, 54%, as explained by my colleague, comes from the retail side of it, and the remaining comes from the wholesale side of it. Again, in the retail side, if you see the split up, HDFC Bank has got a 40% portfolio coming out from auto loans. So this is one of our risks which we have actually considered, like any delinquencies happening on the auto loan side will actually impact HDFC Bank in a very negative way. They are on the wholesale side, the major portfolio of loans is towards private consumption loans. They don't have much of exposure as far as project finance or capex loans or infrastructure sector is concerned.
Could you talk about the shareholder structure? Who owns this bank? Is it domestic or foreign shareholders? And how big is it in this local index?
Yes, you can go to this is the shareholding pattern. The promoters hold 23% and FIIs hold 32% of the stock, but this does not include the ADRs and GDRs which the bank has issued. So the total foreign holding will come to around 55 to 60% for the bank. And then the rest is owned by 10% is owned by the domestic institutional investors and others by the retail investors.
And how big is it in the local index?
Sorry?
How big is it in the local index?
It has got a considerable weight in the local index. Actually, we have done a detailed analysis of its weight in different indices, be it Bombay Stock Exchange, be it NSE, or be it the BankX index. They are having a considerable weightage on almost all of the index, and we believe this was one of the reasons for HDFC Bank's price going up because of the flow of ETF money into India. And whenever a foreign domestic fund house or a big FIA wants to invest in ETF in India, they would actually buy the Sensex or the Nifty. And since HDFC Bank has got a very good share of Sensex and Nifty as a percentage, it will actually impact the stock price in a positive way.
Thank you.